Hey, this is Sherrie, and I have the pleasure of having David Morgan of silverinvestor.com. He is an absolute expert on silver. I love talking to David because his insights are absolutely amazing. He's an expert on all things happening in the silver gold market because, obviously, if he's involved in silver, he understands what's going on with gold too. So, hi, David, you there?
Yes, I am, Sherry. Thank you.
Oh, thank you so much for talking to me. There's so much, we haven't talked for a while, and there's so much that's been happening. But the biggest thing, obviously, right now are the sanctions against Russia. And so, Russia doing a deal with Iran in the way of a bartering type system without the dollar for oil. And tell me what, to me, that is really big, possibly for gold and silver in the future. Tell me what you think about it.
Well, I'm going to start very broad and I'll tell you, what I think the repercussions could be. But regardless of the country involved on the globe, everyone is tied to a monetary system. It doesn't matter if their ideology is communist or fascist or socialist or capitalist or any combinations of a mishmash. Everyone depends on some type of monetary system. So that's the crux. That's the big picture is that money, whatever form, I mean, it could be Russian rubles, it could be Mexican pesos, it could be US dollars, whatever, everyone is dependent on a monetary system. So having said that, once you start to alter the monetary system, then you start to alter all kinds of things because if you're dependent on one settlement currency, and right now was actually the US dollar, but there's been alterations made through the BRIC countries, as you outlined, Sherry. So there could be a point where in the future, and this might be happening very soon, where there is a large alternative to not only the US dollar, but the settlement system itself, where trade is embarked between, nation states in a different manner. And of course, I'm not naive. That's already taking place. There's lots of negotiations that have taken place and agreements made where certain countries trade with other countries in their own currencies, circumventing the US dollar altogether. But primarily, the dollar has still retained its status for settlement and energy or oil. And that is the big one. So if Russia is able to circumvent that status, I think that would have very large repercussions, probably not immediately, although it could.
Well, they mentioned the minister said from Gazprom, they're all talking about now dropping the dollar because of these sanctions, and so once you start a bartering system, and they said they're going to work on getting all the mechanisms in place to accept Russian rubles or other currencies for oil instead of the petrodollar. And we don't know in the way of how long that'll take, but once that happens, couldn't there be somewhat of a snowball effect that the other BRIC nations start dropping the dollar and trading oil in other currencies, the yuan and so on?
Absolutely. I prefer to call it a settlement system rather than a barter system, but it's an exchange. And yes, so what could or probably would take place is all these countries that are holding dollar reserves to buy oil are going to say, hey, I don't need these dollars anymore. And that could be a flood of repatriation, which is a big word to say that those dollars will come back and buy things of value or perceived value for a lot of these nation states. They might buy other currencies, they might buy land, they can buy all kinds of things. But in other words, there wouldn't be the impetus, there wouldn't be the motivation to hold dollars anymore. So that could take place very quickly and it could accelerate. So certainly it would have or could have very big repercussions.
And well, China's been setting up different exchanges, and I believe last week they set up two more exchanges for the yuan exchange. And so it seems like, there's more and more about that. Plus, we know China has been really bringing in a lot of gold, and the people of China have been buying a lot of gold. Um, what will that mean? Let's say with the Russian sanctions of changing oil instead of the dollar to yuan to rubles, China more of the yuan being more of a currency. What does that ultimately mean for gold and silver?
Well, I started with the big pictures, talking about everyone's tied to a monetary system for a reason. That was the answer to this question, which I anticipated. And that is that gold and silver are a currency unto themselves. And it's the most absolute global currency available, gold, especially silver to a subset of gold, or certainly a lesser degree, but nonetheless, either one are money anywhere in the world. And they don't need verification from a bank. They don't need verification from anyone other than both the parties that are doing an exchange. So really, it's the ultimate monetary asset in a way, because one, it can be anonymous, two, it's agreed upon by both parties anywhere. Lastly, it could be private. So really, this is the currency. And what's ironic in a way is up until August 15th, 1971, all settlement was done in US dollars, and the dollars were backed by gold. So ultimately, you had a gold exchange standard in a way. I mean, this is the theory. Of course, it broke down, as we all know. But the point was that it was gold settlement until it broke down. And so now you could go back to gold settlement. That's ultimately what happens in these crises, is that you go from these paper money experiments that fail, and then you go back to something of substance or specie. You go back to usually gold standard or bimetallic standard or something like that. So that's where we're headed as far as I'm concerned. But I don't think it'll be direct. It could be digital currency. It depends how much control the powers that be have. And obviously, with the electronic world that we live in, they have a great deal of control. And because of that fact, it's very difficult to predict, oh, well, we'll go back on a gold standard. That's how history, shows us again and again and again. Possible. Certainly I wouldn't rule it out. But my mind is more inclined to think that, no, it's probably going to be something more akin to a digital control system where there's a lot more, let's say, verification or whatever. And it's going to be, could be, along the lines of the Brave New World, the 1984 digital currencies that are mandated by the state. I mean, it's difficult to say because we're in basically an upheaval mode right now.
Well, okay. Speaking of digital currency, first of all, I just want to mention this. This is weird. The other day, I had to get a tire put onto the rim. Anyway, and so it was like $8 and something. And so when I went to pay, the guy looked at me and said, "Is that going to be credit or debit?" And I looked at him and I said, "Don't you accept cash anymore?" And he's like, "Oh, yeah, we accept cash." And I'm like, wow, okay. So speaking of digital, it seems like everything from debit to credit is digital in that respect. But, and that seems to be the way everything's going. But with Bitcoin, it shows that nothing, I wouldn't trust Bitcoin for anything. That was all digital. And look what's been happening with that.
Well, I've written an article recently that was not that favorable, but I'm open-minded enough and I guess studious enough to realize that, the market knows more, and in a real free market, and that's certainly a free market situation. And I'm not against it. I'm for people, deciding for themselves. But there have been issues with it. But there's issues with paper currency. There's issues with gold. I mean, there's, counterfeit gold. There's tungsten bars that have been discovered and all that. I mean, in the human realm, there's nothing perfect, especially in monetary affairs, because it's a good system, especially under certain conditions, which we really don't have anymore. I mean, the basis for a gold standard or bimetallic standard is really it limits the money supply, and it maintains a great deal of honesty, because the banks really are just warehouses in those systems. I mean, I'm talking about the classic system. So the banks don't provide much of a function other than as a warehouse. But of course, those days are long, long, long gone.
Right.
But the idea
So you were saying, I'm sorry.
So it's been a very long time until you had, banks as functioning as basically, you know, warehouses or vaults. And, will we get back to that or not? Who knows? I doubt it. Again, as you said earlier about the dollar, I mean, or, cash. I mean, cash is basically frowned upon. There are some areas that won't take cash. I mean, I fly all the time and you cannot use cash on an airplane anymore. And it's been that way for quite some time. You used to be able to, drink was $5, pull out $5, hand it to her and get your drink. Not anymore. It has to be done with a credit or a debit card. It cannot be done any other way. And you'll see that more and more. And the banking establishment, whatever you want to call it. I mean, it could be private enterprise as well. I mean, certain, fast food, obviously you can buy with cash, but you also now and have had for years a little, slot for your debit card or your credit card. So it is moving that way. So back on the point that you asked, going back to, a gold silver standard, again, I don't really think that will happen ultimately in the mainstream establishment banking system. It could, but I think it'll be more of like an underground system where, you see like on Craigslist as a quick example, apartment for rent for so many ounces of silver per month, or I'll trade my car for so many ounces of gold or whatever, that type of thing. I don't really think it's going to come into the mainstream. If it does, I believe it'll be a gold cover. It will not be an exact gold exchange. In other words, you would have the bank or the authorities, the state, whomever, stating that you have this much gold on reserve and it's backing your currency, but you really couldn't go up to the window at the bank and say, hey, here's this much digital, here's how much money I have on my phone in your bank. Can I get gold for it? And they'd say no.
Well, first of all, to me, the whole credit card thing is a way of control, of tracking how much you spend and so on. But in the U.S., I can't see a gold standard coming because the U.S. people have not, everywhere around the world, but in the U.S., are people buying gold as fast as they can. But the citizens of the U.S. seem to be, I don't know, in la la land about everything. They're not buying gold and silver like other places in the world. Speaking of that, it was interesting. IMF last week wanted Pakistan to sell their gold, and Pakistan said no. Is that a telling sign that they are needing more gold, or what's the deal on that? I mean, they raided Libya for the gold. They wanted to do that with Iran, but haven't been able to in Syria. So trying to force Pakistan to sell their gold. What is the underlying meaning behind that, do you think?
Well, Sherrie, you've already said it. I mean, the basic truth is, regardless of what the bankers say or what they pretend, gold is the ultimate money. They know it. And because they know it, then they play these games with the paper gold market for price suppression and to increase the quantity of it, and greatly for settlement, because true settlement in gold takes place rarely. Most settlement takes place in some underlying currency. So you have one side of the face saying that gold's not important, gold isn't money, I don't understand gold, it's a tradition, and all this nonsense that comes out. And yet, if you look at the true actions, basically it's still coveted, it's still recognized as kind of the ultimate asset or the ultimate money. And certainly we're heading that direction, I think, where nation states individually, China, Russia, and many others understand that gold's important in the monetary system. Yet you hear, contrary comments almost constantly from the establishment, especially in the Anglo-American Empire, which has had the luxury of the reserve currency for so long. But the truth of the matter is these nation states know what's up. And because of that, you'll see more and more of this, I believe, where countries ask to repatriate their gold or refuse to give it up or whatever. So gold has been important in the past, and it's important now, and probably be more important in the future.
Well, Okay, so gold, there's so few. Silver. Okay, gold is way up there. And it would be great if a lot of people were able to hold it, but it's so much more expensive. Whereas silver to me is the metal that the middle class, anybody can save and buy an ounce of silver for 20 some dollars, or at this moment. Um, so where is silver and gold? Okay, but I want to put silver in the forefront here. Have been manipulated. Oh my gosh, so many years, and people are just. It's like it's never going to end. What will end the silver manipulation? And then where could silver go? What's going to do it?
Well, Rob Kirby did a great interview with Greg Hunter of USA Watchdog on that topic, and Rob, and I agree with him, says that it'll end when the physical market has a big disruption. And he used China as an example, or perhaps he said it directly, that when China, doesn't get a gold shipment, game over. Could happen in silver as well. It could be a big silver user, like a Dow or DuPont, although that's unlikely because they get their silver directly from over-the-counter contracts with big mining houses and big refiners, and those things are already in place. But it probably would be more likely in the investment side, where you have a large silver fund that went to buy, say, 20 million ounces of silver and were delayed, and didn't get the product in a timely manner. And so it would be a physical market's been the crux of it always. I've always maintained that. Many others have as well, because you can create, the gold market is basically a fractional reserve system, just like the banking system is a fractional reserve system. There's more claims out there for gold or silver than there exists in physical reality. And as long as there isn't a gold run or a bank run and everyone comes to the window and says, I want my gold now, or I want my money now, there's never a problem. And the mechanism for that is that it's about a 10% reserve traditionally, although it varies and it's lower than that currently. But for every ounce out there, it's only about a chance of about 10% of the owners ever coming back and saying, I want to trade this certificate in for physical gold or whatever. So because of that known human behavior, it works for a very long time. But at some point in time, human behavior cannot be predicted 100% of the time. It can be predicted part of the time, but not always, because humans are unpredictable. Not, in all cases. So you can't know that day or when so-and-so is going to come up that's had a relationship with a big, let's say a big store of gold, let's say a huge amount, and says, like a nation state, says, yeah, we want our gold back. And they say, no, you can't have your gold back right now. And that would be the start of it anyway, if not the beginning of the end, so to speak.
Hasn't that happened though? And haven't we been hearing it? And I know it's always the physical market. And it seems like there's been so many times in the last few years that we're hearing that, we've heard the physical was getting short and so on of what's available, and people, companies were hoarding the physical that would need to have silver or gold in the future industry. But it seems like nothing would ever completely come through with that, and it just keeps going on and on. The manipulation. Do you see any point in time in anywhere in the near future that the physical demand is actually going to exceed the paper manipulation?
Sorry, Sherrie, can you ask the question again?
The whole physical. We've heard for years about the physical. And the manipulation would end when there's a higher demand for the physical, and the physical isn't there. Is that point in time, do you think, ever going to come?
I think the goal is pretty clear. The data is out there in the public domain, and basically China of recent has taken basically all mining supplies. So that means all new gold that's produced on an annual basis is pretty much gobbled up by China. Yet the physical gold, and that's physical gold. And then on top of that, you have, the retail market, the little people out there that buy gold coins. And then, of course, there's others as well. There's institutions that buy it as well. So if the entire annual supply is bought by China, and if assuming the presupposition is that that continues, and there's additional demand on top of that, then it starts eating into the stored amount. And most entities now are holding their gold. In other words, gold is held for a reason, and most gold owners understand it. Physical, I'm talking about the physical market now. I'm not talking about the paper gold market. And so there really isn't a huge turnover in the physical market. Now in the ETFs and all the derivatives of gold, there's a great deal of turnover. I mean, there's so much turnover, it's preposterous to think that there could be that much actual trading relative to a physical supply. But nonetheless, as I explained a bit ago about this fractional reserve system of gold and everything else, I mean, everything's been just almost any financial asset you can name has got a derivative on it, and it's been expanded. In other words, there's a unit of X, but there's a derivative for X. Anyway, the point being that, yes, it's getting close in gold, and I think it'll continue. And as Rob Kirby said, and it's most likely it would be China, because China is taking no prisoners on this gold situation. In fact, there was an interview recently, I forget who it was, I think it was a gentleman in Germany, stated that the refineries are backed up to about 2016 on taking gold that's already in existence, physical gold, and refining it or re-refining it to what's called the Chinese standard, which is 4 nines fine and kilo bars. So some of these gold holders, for example, in the Middle East, are taking their present gold and re-refining it into the Chinese standard, because these people recognize that that is the new gold standard. It's not Fort Knox gold. It's not the U.S. gold standard, really. I mean, this is, not a really far-thinking idea. I mean, basically all you have to do is, follow the money. And if you believe that gold is money and everything else is credit, as J.P. Morgan said, then if you look at the money, you got to see where it's flowing. And you also have to see that it's being re-refined. And that's probably for a reason. There's not a lot, but there's some mistrust out there on some of these, gold holdings, what their quality is, and if they're tungsten filled, or what they really are. And the way to find out, of course, is to cut the bar in half and find out what's there, or take the gold and re-refine it and redetermine for total accuracy what gives.
When we were talking on the phone the other day, I mentioned I would love to find out. You had mentioned earlier in the interview about 1971, the U.S. dollar obviously going off the gold standard with Nixon. And here we had in 1980 when gold went up to 800. We know the Hunt brothers did the manipulation, and silver was up to 50. But my question to you was, and is at this time, is I would love to know. We know the Fed has been printing trillions and trillions of dollars, and more than we even what's been made public. So we don't know how many trillions are out there. So I would love to know what the percentage from 1980 even, when gold was at, let's just say 800 or some of that area, to how many dollars were out on the market, compared to what the gold is at now, compared to how many dollars. What is the reality compared to 1980 that gold should be at? Would it be at 20, 30,000 compared to the dollars on the market? You understand what I'm asking?
Yeah, I do. I have to preface it with a couple of definitions so that we understand what we're talking about here, because there's a lot of it's a very simple math problem. It's a division problem. You just divide two numbers and you come out with another number. So it's a pretty simple, fifth grade, fourth grade, third grade arithmetic problem. So basically, what you need to do to find the theoretical price of gold is define what it is. Now, in my definition, and I'll take blame for this or not, the easiest one for me is that gold is the ultimate currency or ultimate money, to keep on track with Mike Maloney's definitions. And so to find out how much currency it's worth, if you go into 1980 when gold peaked, if you took the gold supply that's purportedly held by the U.S. Treasury, which is roughly 265 million ounces, and you divided it into the M1 money supply, that's our actual currency. That's not loans, it's not credit, that's not M2 or M3, but it's an exchange for dollar bills for gold. If you did that, what you would find, it was $400 an ounce. And yet we all know that gold went to about $850 on the spot market. So it actually covered by a factor of two. In other words, you could have actually gone back on a gold standard using gold as the currency, not as credit, but as actual, money. But that didn't happen. So if you do that same experiment now, Sherrie, you do the same thing. You would take, for U.S. prices, you would take the M1 money supply and you divide it again by roughly 261 million ounces of gold, and that would give you a number, that little division of how much an ounce of gold is as a, pocket money. In other words, this is money that's readily available. This is not on loan. This is not deposit. This is straight out what it is. I mean, the gold is a physical reality. It's not, it's like a piece of, a physical dollar bill is a physical reality. Let's be honest here. So that's what we're talking about. Now, there's others that'll argue, well, that doesn't cover it. It's got to be M2 or it's got to be M3. It's got to cover all this. I disagree with that argument, but, I can't state that my method is the only method. There's others that say, no, in order for it to cover all the credit out there, gold would be 40,000 or 50,000 an ounce and that type of thing. But what my point is simple. The math is a division problem. And the more important point, I think, is that it can overvalue relative to the currency supply. And that's what happened in 1980. You can go back to an article I wrote back in the early 2000s called Engineering the Price of Gold. And it goes through the math in that 1980 example. And you can look up the M1 money supply now and divide it by 265 million and find out what the current value in US dollars are for gold in theory.
Okay. Okay, well, I've never been great with math, but I will try that. The problem is knowing how much money really is out there. Okay, we've talked about gold a lot, and we know, and we've talked about now the whole Russia sanctions, and then what will happen if the petrodollars goes. Gold will go up, and the whole manipulation of gold. So, taking gold in that respect, where does silver go right there alongside gold and go up? Is silver something that people should, we've heard about buying it, but should people really right now with the prices under $20 be buying silver? And is there really an expectation in the not too distant future of it finally breaking out?
Yes. Most silver students or silver investors believe that, silver is a smaller market, and that's a fact, than gold. And that it is, it's a metal that is not only a monetary metal, but also, obviously, it's an industrial metal as well. And the idea that, will silver go along with gold or not, so far it has. There's an 85% correlation, and we've had deflationary scares and inflationary scares, and certainly we've had monetary uncertainty this whole time, meaning since 1971 onward. And silver is basically gold as a subset. And usually if gold goes up, silver goes up more. If gold goes down, silver goes down more. So the idea that in further monetary uncertainty, would silver be perceived more as money? And the answer is yes, it would, in my view anyway. And it would probably exceed the gold-silver ratio that currently exists, meaning that the ratio would narrow, so silver would be worth more in gold terms. And this was done in the last great inflationary scare up until 1980, and I think it will happen again. But just because I think it doesn't necessarily mean it's absolutely true. But silver's use is very, very important in industry. So if you just take the industrial argument and you look at the United States Geological Survey, Ted Butler did an article on it years ago, probably about 10 years ago, that silver would be, according to the USGS, the first element or mineral to basically be in such short supply as to be unviable to mine out of the ground. And that is, of course, conjecture from the aspect that depending on the price, it becomes economic or non-economic. But as you said, Sherrie, silver at 20, right now it's right at its economic tipping point. And under 20, most silver mines cannot mine silver at a profit. So they'll either stop mining or come up with a new way to mine it cheaper or go out of business. Or the market will drop and will stay there for a while until equilibrium is reached, which I don't see it dropping much more. I mean, it could drop substantially for a moment. I mean, for, a day or a week or even a month. But in, man's world, that doesn't mean that much because you're not going to make a decision based on 1 month activity. I mean, you can see the price drop and come right back up. The point being, at this current level, it's a real bargain to buy it because the investor is buying it at basically less than the cost of production. Not that it couldn't go lower, but certainly a time to buy it is now. And with technology, I mean, if you go back about a decade, the use in industrial uses was about 35% of the total market. Now it's over 50%. And during that time of that decade, we have increased the silver production substantially. So it's 50% of a bigger number. So that gives you the trend is rather significant in the amount of silver used in energy, water purification, food packaging, anything electronic. So there's a lot to the silver story other than just the monetary aspect. Is there enough industrial demand alone to put you in a shorted situation? And the answer is not yet, depending on, economic conditions. And the way I see it, they aren't all that bright, but, it could be wrong there. You would see, more and more demand because, there's an infinite demand for a better way of life. People always want, more. It's sort of part of the human condition. Of course, some find that more isn't what they want after all, but I want to get into a philosophical discussion. The point is that the demand side of silver has been strong. Yes, it's fallen off. And one more comment, this is about recycling. A lot of silver is recycled, a lot isn't, but roughly 200 million ounces a year is recycled. If you go back to not that long ago, certainly in my lifetime, you go back to 1980, the most silver that was ever produced in any given year up until that period of time was 350 million ounces. It never got above that. In fact, that's the mistake that Jerome Smith, silver guru of latter days, made his biggest error. It's predicting, silver be $200 an ounce in 1990. He based it on an assumption that was invalid, that the mining supply of silver would never get above 350 million an ounce, or 350 million ounces. And that was true when he made his presupposition. The problem was technology changed and the mining industry was able to extract metals at a lot more efficient basis. And so the profit curve changed because technology changed. And so the point I'm making is this. Go to 1980 or earlier, 350 million ounces. Well, now 200 million ounces is just in recycling. So that's a large quantity of silver that comes, to the market every year based on recycling of electronics mostly. It used to be photographic, quote unquote waste. It's not. They wouldn't waste it. They recycle it. But that's the story.
Well, I know that that one mine had I believe it was in Utah, wasn't it, that had the landslide, and then also, so that last year in the way of cutting into silver production, but also that the U.S., from my understanding, the U.S. had pretty much used all the above ground silver, and yet China, the expectations were for them to use, I don't know how many times more that has ever been used already in the way for their society and growth. But silver is the most important metal in the world. And I know that in the way of, for, I think people need to, as with the Ebola virus and other things that are happening, understand silver kills any virus and bacteria. It is literally something everybody should have, in my opinion, in the first place, just for its aspects of being able to do that.
Yes, I agree. I mean, I've really tried to shy away from the colloidal silver thing, but I'm going to probably do an interview here in the upcoming months. I'm traveling almost the entire month of April, but I received a book called The Most Precious Metal. It's by a Dr. Gordon Peterson with Dr. Brian Frank. And the subtitle of The Most Precious Metal is Why Silver is More Valuable Than Gold, Platinum, or Money. And of course, they go into all the benefits of silver being a biocide. And of course, as I signed off in the Morgan Report from day one, wishing you health above wealth. I mean, I'm a true believer that if you don't have your health, you really don't have a lot. It doesn't matter how much money you have if you have ill health. So this book, I'm going to do an interview with the authors at some point in the future about the aspects that you just mentioned, Sherrie. And I think it is very important for people to at least understand silver capabilities. Silver Institute's really kind of forthright about it, that the bottled water industry, some of them use silver in their processing because there are these pathogens that nothing else kills. I mean, how many people out there that do, any internet research realize that the antibiotic situation has been so pervasive, that it's been so overused, that there's now some areas where these antibiotics don't work.
Right.
But silver so far has killed anything.
6 minutes, silver kills anything in 6 minutes times. And by the way, ISS uses silver in their water up there, in the way the International Space Station uses silver to purify their water. Did you know that? And
yes, actually I did, but there's a lot of things about silver I don't know. I certainly am not a know-it-all. So, Sherrie, in the interim, I went to my other screen and I looked up the M1 money supply, and it's $2,731.5 billion. And if you divide that by the purported Treasury holdings of 265 million, you roughly get $10,000 an ounce gold. So that's your answer for current day.
Wow. And that's not the digital money and all the trillions that are out there. Wow.
Yeah, that's only the money stock, the M1. You can look up M1 on Google and read what it is, but basically it's physical bank notes and checkbook money. It's what you consider ready cash. It's anything that's not tied up by a loan or held in an investment or a long bond or any of that stuff. I'm not saying none of that stuff exists. It does. I certainly acknowledge that. What I'm saying is, in a pure gold standard, it's physical, the physical reality. And so M1 comes the closest to that. And that's how you come up with that number. Now, if you took the M2 supply, then it'd be a bigger number. If you took M3, it'd be astronomical.
Yeah.
But if you just come back to, the argument, I make several arguments. The one is what I just said. The second is, all the wealth and all the money in the world doesn't buy the world. I mean, this could be proven fairly easily. You just need to do a thought experiment for a moment and think that, if you had an axe and a saw and a lot of skill, you could go into the woods and create a log cabin. And that's building wealth. And that log cabin would have value, but there was really no money involved. There was labor involved and there was skill involved. But the idea that all the money buys everything isn't true. There's a money supply, but that supply doesn't buy everything. So, if you took all the credit out there, that represents, everything that exists and future things. And it really doesn't cover the future commitments by a long shot. But the idea to me is rather arcane. I don't like the idea that, the gold standard should cover all credit that's been out there. I think credit that's bad credit should vaporize, and all that should be left in a, on a non-leveraged system would be the M1 money supply. Well, I don't want to beat it up too much. You can agree with me or not. If you just do that basic math, you're looking at $10,000 an ounce gold.
And so if we had 10, just give me an idea. If we had 10 that for the real money cash that's out there, $10,000 an ounce gold, what would silver then be? Taking a guess.
Yeah, well, going back to the article I wrote, Engineering the Price of Gold. I said, well, now how do you determine the price of silver? And that's pretty tough because silver is not a monetary metal as recognized by the state or the authorities.
Right.
It's only by the public and very few of the public. So if you go back and you say, well, the true ratio is 60-1, then it'd be 1/60th the price. If you believe like me, it could get back to the monetary or classic ratio, it'd be 1/15th that price, or even the natural ratio, which right now there's about 8 ounces of silver for every ounce of gold. And that would mean, say $10,000 an ounce gold would, at a 10-to-1 ratio, be $1,000 an ounce silver. But it's just an academic question. No one really knows. It could be anywhere between, 1/10 the price of gold or 1/60th the price of gold. I favor that it'd probably be more like, 1/20th or 1/10. It could be, $1,000 an ounce. It could be $500 an ounce. It could be $250 an ounce. It's hard to say. I do think strongly that silver will outperform gold, because when gold gets into these larger numbers, then what you're going to see is more and more people can't afford gold, so they'll move to silver.
Right. David, I want to thank you so much for taking the time to talk to me about everything going on. I sincerely appreciate it. And if you, sorry, go ahead.
Sherrie, that's my pleasure. Thank you.
And I want everybody to know you can go to www.silver-investor.com, and you can go to David's site. And he has a great way of just signing up, putting your email address, and every week he'll send you information, or sign up for subscribe to his newsletter, which is very informative about, as you can see, David was talking about the M1 and 2 money supplies of the cash compared to credit. David really knows what he's talking about. A lot of great insight. Yes, gold and silver's been manipulated, but David's on top of it for knowing where the future's going and where to place yourself and purchasing gold and silver and other mining companies. And so David's an expert, and I cannot express how much people should read his newsletter. It's really awesome. David, thank you again. And I appreciate your time.
Thank you very much, Sherrie. I appreciate it.
You have an awesome day. And anything else you need to add? Did I miss anything?
No, you did not.
All right.
Okay.
Hey, I'll be talking to you.
Very good. Thank you. Bye-bye.
Bye.